𝗕𝗪_1 is setting some insane gains. Guys, in this video, we're going to dive down into the technical analysis on 𝗕𝗪_1 to see exactly what has been happening, why we set a new all-time high yesterday, and what to expect to happen next. As we get into this, if you do find it useful and informative, hit that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with that said, done out of the way, let's actually just dive down into this weekly chart and talk about what's going on here before going into the smaller time frames. So obviously, guys, as many of you guys know already, if you're familiar with the channel, we have been following the 5 impulsive waves to the upside. Okay, these impulsive waves include 3 to the upside. Okay, so that's wave 1, wave 3, and wave 5, followed by 2 to the downside. This is wave 2 and wave 4. Okay, so basically pretty much from March of 2020 is when these kind of impulsive waves started, and through to the peak that we actually saw up in March of 2021, there was 18,905% in gains before we started to see this downward trend. This downward trend here, this fourth wave correction, was pretty much what was where I guess Bitcoin was at 65k and was pulled down to 28k, dragging the altcoin market with it. This is quite a natural correction, although the lead up to Bitcoin's pullback was basically manipulation according to the Wyckoff distribution model. So again, if you're familiar with everything that was going on there, obviously you can see that most of these projects needed to have a correction anyway. But obviously I think we had an overextension on wave 3 that then obviously meant we did drop quite down quite significantly within our wave 4. But that being said, it was pretty much in line with everything else you would expect with the 5 impulsive waves. We didn't cross wave 1, so everything was intact, ready for that push to the upside. This was an opportunity, if you saw it that way. On this channel, we've been talking about this for a very long time, pretty much since we started to see this downward trend appear. You know, ultimately we're still in a bull run, and you know, people were calling this a bear market. That wasn't the case. But this was an opportunity to basically continue to buy. We got a lot of stick, basically, you know, people complaining that we were bullish when, you know, the market was downtrending. But we're bullish because we're buying up all that fear that's up for sale, right? People who do not know what was going on, we're just basically selling potentially at losses and getting completely wrecked. And that's the opportunity to buy up that fear ahead of where we're going now. Now, obviously, in the case of 𝗕𝗪_1, where we did actually see us come down to this buy zone down here, we only had really one big opportunity touching on our upward trend line at the bottom of wave 4. This actually came in at a low of 4.7 cent, ahead of now pushing us up to over 31 cent. So yesterday's high actually came in at 32 cent on the nose, and again, when we get into the smaller time frames, we are actually targeting 33 to 34 cent before we actually start to see a correction pattern appear. But again, everything's pretty much on track for that. Now, when we actually take into consideration these 5 impulsive waves and the trends that are associated with them, we can see a 4.236 extension for wave 5 ending at about 96.5 cent. That seems to be a pretty good kind of price target for 𝗕𝗪_1, considering the kind of progress that it's had so far and its current position. That does seem plausible. Going higher and above and beyond that in this particular cycle, you know, it's possible. Anything is possible, but I think it's unlikely. It's more about you know, what is probable, and I think probability would say that actually landing on 96.5 seems to be pretty much where we'll end up. Now, this is obviously at the upper end of things, and if you wanted to be more conservative, that's where our daily chart comes in. Our daily chart shows us a more conservative kind of price expectation. This actually comes in at 80 cent, and this is just based on the wave 3, wave 4 scenario. Okay, so basically take one trend into consideration and you get to the 80 cent area, rather than taking into consideration wave 2, wave 3, and wave 4. This one's actually a little bit more conservative. If you're new to the space, you can lock in your profits. Don't let greed get the better of you, because that is going to be your worst enemy as you get towards the end of this bull run. Okay, so as things heat up now, we can obviously see we are moving towards our 1.618 of 33.4 cent, and this area is actually coinciding with our cup and handle. Nice target. We spoke about this either at the end of September, beginning of October, about moving up to 33 to 34 cent, and this is again an area that resonated really well with the cup and handle, but also with this fib working from the top of wave 3 and the bottom of wave 4. So again, all that technicals have come in, and I know it really splits opinions as to whether or not you believe in technicals in the crypto space, or whether or not you think that you know, technical analysis just doesn't mean anything, and it's all kind of speculative, etc., etc. The problem that you have with that is that it's heavily traded by algorithms, by bots, obviously, and of course, experienced day traders and people who just make money by trading and scraping profits from charts, right? So it's important that we also understand that actually trading and the technical analysis is going to be one of the key drivers for finding out where you're going to find reversals, where you're going to find support, where you're going to find resistance, right? And in the case here for Harmony 1, 33% is going to be that area, in my opinion, that we're going to find some form of resistance. Now, it came in slightly earlier at 32% yesterday, which was very frustrating because we could have continued that move to the upside and actually continued up to the 33%. I think people were potentially locking in profits before you actually hit the level there. But that being said, we've had good recovery today, and we're going to go dive down and see whether or not we're going to continue this growth to the upside. Now, when we take a look at our stochastic on this daily chart, we can see that we're heading up into the overbought area. The fast line is there, but the slow line is not. This allows us to continue that growth and allow us to continue to push to the upside. So 33% does seem something that we're likely to see, maybe pushing up to that 34%. Before we are actually fully up in this overbought area on the daily chart. So everything's actually looking very, very good, right? The lead up to that kind of new all-time high that we had was pretty much driven from the cup and handle that started way back in May. A huge cup here was formed, and then this top of our cup actually came in at, around the kind of second week in September. And that's when we started to form the handle. The handle just kind of being completed early October, slight pullback, and then launched up to the upside. You could also argue that this itself is a cup and handle, right? So really interesting kind of moves have been going on. Normally, you'd actually expect this cup and handle just to continue the way up, but instead you had this mini cup and handle actually taking us to our target. So really interesting kind of way to kind of analyze that. And again, once you actually broke that 786 and we moved up nicely, the first target anyway was 33 cents. So whether or not you believe in the cup and handle pattern or the move here just on the Fibonacci retracement zones, breaking that 786 at 18.6 cent and then moving up to 33. All of these things added together make a very bullish chart for Harmony 1 and to continue that growth to the upside. Now, as we break this down a little bit further, 39 cent is going to be the 1.618 from our weekly chart. Okay, so based on the additional trends, what do we actually have going on here? Well, we have a 39.7 cent area based on wave 2, 3, and 4 for the trends. And this one actually going to be another area that we're probably going to find resistance on that journey to the upside, right? So it's important that we also acknowledge that, we're not going to move up in straight lines particularly as we go up past our 33.4 cent and up towards our 51.1 cent, right? So ultimately, we're going to find ourselves kind of finding up these little mini resistances and that battle and that journey to the upside. Overall, on this particular chart, if we take our current price position, and to get to 80 cent is only 156% now. So we've been moving along very, very nicely. As at this point, guys, we are going to jump over to the advice.io dashboard just to check that underlying sentiment and data for Harmony 1. For those who are unfamiliar, there's a link in the description down below. Do sign up to advice.io. It is completely free and you're going to get more insight on your cryptocurrencies. Now here for Harmony 1, we're going to be taking a look at what's going on in the background data. So overall, we have an A2 rating. So again, top tier cryptocurrency. This is the best rating we've ever seen a cryptocurrency have on the platform. So that should be pretty good to kind of get your juices flowing in terms of understanding that this is a top tier cryptocurrency. Now, as we come across here, the Fear and Greed Index is A1. Now, the Fear and Greed Index is not the Bitcoin Fear and Greed Index that you find across various different YouTube channels, Twitter, etc. This is a Fear and Greed Index as derived by the artificial intelligence and machine learning of advice.io. Now, this is for Harmony 1 and Harmony 1 specifically. This A1 rating is the best that the platform can give, which means basically we're extremely greedy, okay? So we're right up in that greedy element. So this is usually where you would expect profits to be taken from those experienced traders and where you find retail investors FOMOing in, chasing those green candles, for example. So right now we have to be aware that that could cause some volatility on the smaller time frames to expect some profits to be taken and then buy back in slightly cheaper, i.e., sell when it's high and buy when it's low. Okay, so do expect some seasonal traders, some professional traders and seasoned traders, if you will, to be taking some profits and then buying back cheaper. And I am expecting a pullback at around that 33 to 34 cent. And obviously we'll have a look at the charts and see where that's likely to go. Now, the Harmony 1 Sharpe ratio, this is an A2 rating. So the Sharpe ratio is your risk reward ratio. And as you can see, we have been above our 50-day average since August. So even during the month and the pullback of September, the data here here at advice.io has been indicating that we might want to have some exposure to Harmony 1 ahead of what is coming. This is a fantastic way to actually see this in reflection to where things have been and where we are right now. This basically meant that during all those cheaper and fearful month of September, you could have been buying up Harmony 1 at a significant discount. So basically the rewards do outweigh the risks, and it's great to see this in relation to your fear and greed index. These two things are now aligned, whereas in September we had extreme fear and we had basically a Sharpe ratio that was indicating that you might want exposure. So everything's looking pretty good from those two indicators. Now, as we come down, we have an ROI, an A1, the best rating you can get. But again, makes perfect sense when we've seen such significant gains in such a short period of time. It's outperformed things like Bitcoin, Ethereum, Cardano massively. Okay, so it's good to see that that continues to grow. And of course, a fantastic ROI on our portfolios. Now, the moving averages is an A2. Overall, looking pretty good. Nothing wrong with the 10, 50, or 100-day moving averages. And the last indicator, the AMI-HAD ratio, is an A2. Again, this is your liquidity-based indicator. And again, no problems with liquidity as a rating of A2. Buying and selling at Harmony 1 is perfectly fine. So it's good to see that that underlying data is now still very, very good. And it's still indicating that we should be continuing our growth to the upside with some small volatility from profits being taken. So as we get back into the charts here and jump down into our hourly view, this is where we actually can start to take a look and see what's been going on. How did we actually get there? So along with obviously the cup and handle pattern, we did identify on this smaller time frame here the Elliott wave triangle. Okay, so basically here we're looking at this triangle, and then we saw this complete with wave E, and then we got this huge break. Now the break is full of 5 impulsive waves, 2 to the downside, which will be ABC corrections, and then an additional 5 impulsive waves for each impulsive wave to the upside. Now I'm not going to go into too much detail on that, but basically you can just dive into various different levels. We're going to keep it pretty simple on this hourly chart. And for those people who were aware, basically pretty much from early October, we've been talking about this triangular wedge forming, and then breaking down, looking for that E, looking for the break. Now, obviously, we broke up to our original pullback up here, which was on the 21st of October. We saw the pullback come in. This completed our wave 2, and then we indicated that we were looking for this huge spike to the upside. And again, in here, you would be expecting to find 1, 2, 3, 4, and then 5 impulsive waves inside our impulsive wave itself, right? I'm not going to go into that detail, but you get the idea. You can see that there's a couple of pullbacks as we head now up towards our 33-cent target, and this is where we then expect to see some significant pullbacks. Now, obviously, the amount of pullback here is going to be the thing that we need to be monitoring. How far are we likely to pull back down in a retracement? Okay, and what we're going to look for is basically taking the low of our wave 2 here up to our theoretical wave 3 high. We could potentially pull back down to about 27 cent. And I think that would be an interesting zone to kind of see. Now, with wave 4, usually, though, we don't go as deep as that. So 27, 28, or 29 cents seem like pretty plausible areas for us. There is a support line that has formed on 29.4 cent, which is where I have put our wave 4 for now. So right now, we're going to be interested to see if that actually kind of comes in and whether or not we actually drop down lower than this new support level that has been found. Another good area on the chart here is 28.6. So again, I'm just going to quickly mark that up with a horizontal ray. I'm just going to pop that there. So what we're looking for, guys, is basically as we hit our target of 33 to 34 cent, I do expect us maybe just to wick a little bit higher than this. And then basically a pullback will be due, and that will come down, and we'll find good support on a few different levels, right? We'll look for an ABC correction in this move. So it might be that we bounce from here initially, we move up, and then we pull back down maybe into the lower area, right? So an ABC correction, and then from here we look to basically move up again in our 5th wave to another impulsive move. So everything's looking pretty good from this chart. Again, we'll just have to monitor this on every kind of 48 hours or so, just to make sure everything's moving along as expected, and everything's there basically on track for moving up nicely to those higher tiers. So if you're a conservative player in the space and you want to make sure you lock in your profits, then 80 cents should be a nice target for you guys to have. But again, your exit strategy is going to be key. We did a video for the members on that one, so do check that out if you haven't done so already. And obviously, if you're more seasoned or wanting to basically optimize your returns, then pay attention to the trend-based fib extensions. These are obviously slightly higher risk, but basically they're showing you based on the trends, the historical trends of wave 2, wave 3, and wave 4, that we could be aiming for that 96.5 zone. And again, that would be a significant bump on your portfolio depending on your position with Harmony One. Guys, I'm going to leave the video there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.